Hey traders, Nick here looking at gold. So it has had a good time of late, a nice rally for somebody who's long. You can argue whether to book it now or not. I usually like to book, or at least to lock in some profits on points of contention. So it's got a good rally going, and it's okay to book some profits sometimes. But what now? First of all, I have to also look at the dollar. Because they tend to move in opposite directions. I know mathematicians will go out there and tell me there's no correlation because they define it as. To me, I'm looking at the chart. This purple stuff is the dollar, and I see enough where one goes up, one goes down, to where I say, okay, when let's put it this way: when the dollar spikes, it puts downside pressure on gold. That's an undeniable fact. Not just gold, any other commodity priced in the dollar. Now, the oil trade has its own thing going on because of war and whatever, OPEC or OPEC. But if something's priced in dollars and the dollar takes a spike, that something gets downside pressure. Fair enough. I could say that confidently. So you can see purple spikes, gold falls. Except today, they're both running together. So back to the original point. Do I book profits? Okay, so these are my lines. So up here I said, okay, there's something that could happen here. They could lose the neckline, they'll fall, and I estimated down to here. They came close to it. I said, here's the same situation, but they didn't. They had a big rally. When they got to here, my comments were that it's too tight. That's why I drew these green things. Things is a technical term. The green line that comes down here and the green line that comes up here, it's coming to a point. Either they'll break down or break out. And my estimate was that it would break out to here. I didn't even bother extend it to the whole thing. And boy, did it deliver. So now where it's at is where it failed before, but there's that little poke up there. So I have to extend this chart to show what's going on. Let's go to a weekly, excuse me. And it's probably not enough to do, listen, that's weird. Okay, maybe I'll go to a monthly in a second. So weekly shows that this is a bullish pattern. Actually, let me move it down a little bit so we can gain some room here. Okay. If I see a chart, forget gold or not gold, any chart, marked up or not, when it does, it creates a neckline. What does that mean? They came to it and failed. Came to it. The bear said, nope, we'll get you back to where you were. And the bears won and then some. They got here. This time they got here. And then the bull said, no, we can do it again. They come back to the same point in time, neckline. And then the bear said, we can push you down. We just did it. And then the bears fail to come even close to this. So now they built a shoulder and a head. But this is the inverse. It's upside down, right? So if the bulls are able to close above this is a weekly candle, and that doesn't count until they close above it, technically, then they could rally. How far up? The technicians will tell you as much as this. So they will probably draw the target somewhere up here. I look at the last real fail to say, okay, that I believe it, like this point right here, before I would chase that big candle. So if indeed it's that big, why not wait a couple of dollars out so you don't get faked out? And I would probably look left to see where it would stop first. Maybe it gets there eventually, but it will stop first. But that's my point. Inverse head and shoulders if they take the neckline. So that's the big if. So what the heck is that neckline made out of? Let's go to a monthly candle. Oy. I'm going to go out of gold and come back into gold. Again, I've said that before. This platform doesn't know how to reset it. So what the heck happened? Oh, that's not gold. That's oil. Okay. All right, so let's go to a monthly candle. All right. So I'm showing here that this area where it's trying to break out, that's that same point in time where we're looking at. It's been here since 2014. I could argue back to 2010. Look, right from here it was roof, and then boom, they tried to hold it as support. They fell below it. They came and failed. So failed. I don't know. That's that inverse head and shoulders we were just talking about right here. So it's not just that. It's a whole neckline that they have not been able to break out of it. This is the dollar. So if indeed the dollar is peaking and the dollar does this, gold can definitely break out, and it could be big. like 1600 big. So the technicians would be underestimating the spike. Where would it stop first? I would anticipate here, 1427, 1430. I would anticipate 14, let's call it 15, and then somewhere around here. And I'm just looking left and seeing these are areas that were of interest back. This is a monthly candle, so every candle is 1 month. There's a whole junk inside this candle, up, down, up, down, up, down, that we don't see. It's just one candle. That's the high of it, that's the low of it, that's where it closed. So they tried to sell it to zero. They said nope, and they close it up here. So it is viable to stay long gold. If I'm looking to go long gold, I can anticipate it and go long now, but since it's had such a big run, maybe I'll wait out a couple of dollars. Why? Because I know that if it does indeed close above that, and if the dollar falls, this really could take off. So I don't mind missing $5-10 for not to grab a whole bunch of gold before it crashes. Okay, so these are my thoughts on gold. It's a viable trade to stay long it if I'm long it. If I'm looking to get long, maybe I'll stay quiet a little bit to see how it closes above this neckline, and the neckline can be drawn anywhere. What is it now? So 1340, $5-10 from here. It depends on personal preference. Some people like to jump in now and not wait and put a tight stop. So let's see if I can get some lines on that. So I'd ask myself, why fail at 1362, right? I probably wouldn't chase it before 1352. Ideally, I want to chase it above that. And if I am long, I would stop myself completely out of this, 1323. And this would cause me to start to worry, 1335, 1330, another line. But this would be a good stop. Why? Because these are too frothy. Those three giant candles. Easy come, easy go. Those are weak hands, short term. All right, next signing out. If you have any questions, let me know.